Okay, there we go. All right, we're live. We're back. What's up, guys? Oh, hey, Chandler. We're good. Another day in the office, guys. We're back. Thank you for bearing with us on this. Um, the thing about I said it earlier. The thing about trying to live stream is that you don't get. It's kind of like when you make videos and stuff. You get a chance to go back and edit, fix things, and take out mistakes and stuff like that. When it's live, you're just kind of taking it as it is. There's live issues that happen, but we are back. Can you guys see me and hear me? Okay, let me know in the chat, and we can get into some fun stuff here. Finally, we see you. Hello, Daniel. Hello, everybody in the chat. Thank you for bearing with us. Appreciate you guys and the patience that you're giving to us this morning as we get the show rolling. Do you guys, is my shirt like glimmery on the camera? That is so weird. On my end, it's like super glimmery. Give everybody just a moment to tune into the stream. Thank you for showing up. Can see and hear you. Cool. Awesome. So yes, I'm out of my Euro trade. Someone asked me about my Euro trade. I'm all out. I've got a video coming on it. It'll be dramatic and super exciting and all sorts of stuff. But stay tuned on that. I am currently no longer in my Euro short. And I think it's probably a good time to talk a little bit about my updated ideas on the dollar and look around at some currency pairs and see what's going on. So, well, what better place to start than Euro USD? Let me just stare down the barrel of a loser for me. So I took a short on Euro USD, a decent sized short, and price went in my favor initially very well. And then eventually just rallied. We completely saw a breakout to the upside there on the Euro, which now is an issue. You can hear 50 different people. Let me know if is anybody else experiencing that, but it should just be fine. Yeah, let me know if it's odd or anything. Sad for Euro USD. Yeah, I mean, hey, you know what? There's nothing to be sad about. This is trading 101. Sometimes this stuff happens. You take a short, market kind of teases you, goes in your favor, and then moves against you. And you know what? That just means that it wasn't the trade it was supposed to be. I do have another trade open now. I'm currently long USDJPY. This trade came down to a level I liked, and this morning saw some really good bounce effect. So I am long another trade. I've got another attempt here on the dollar long side. So that's kind of where I'm at with USDJPY. Logan, thank you for the update. Audio, all good. Everything looks good. Cool. Thank you guys. You guys, one thing that really is tough for us is like we'll get comments, people saying like, we can't hear you, or like we can't see you. And we're like, we have to scramble and check that everybody can see us and hear us every time. So yeah, if you guys are like really wanting to support the stream, one thing you could low-key do is when somebody says, I can't hear you, make sure you let us know. We can't actually hear you because otherwise we freak out and it's like a never-ending feedback loop. Yeah, I'm long dollar yen. I've got a trade open here that I picked up this morning. I got into the office and man, you want to hear some shoulda, coulda, woulda? I had my eyes on this level, and this morning when I walked into the office, it was trading just near this level, and I was putting my stuff down and getting ready to take the trade. And I had a couple emails I needed to respond to. So I was like, you know what? I think it's going to dive just a bit deeper. We'll test this zone. By the time that I got my chance to sit down and take the trade, it had already snapped back up. But I still liked the trade up here because, again, this candle looked really strong. A big mark of support getting hit here, and then this big pin bar forming. So, I figured, you know what? I'll just put my stop below the daily low. And if markets break back down underneath that today, I'll be out of the trade on dollar yen for a loss. Otherwise, I'm looking to see if I can ride this one back to the highs and beyond. This one has really strong positive correlation to the yields, the yield bond market. Take a look at this. This thing looks very similar, right? These two things are moving in some ways in a correlated fashion. You have dollar yen moving up with the rising yields that are going on in the markets, which has been a really good trade the past year or so. If you've been long, yields or short bonds, things like that, it's been an incredible run. So, yeah. I bought USD CAD, looks pretty nice with a higher high. Jason, let's go take a look at your dollar CAD idea. We talked about dollar CAD yesterday. Just a beautiful technical chart, in my opinion. This looks very healthy. You've got this thing continuously just sort of bouncing off the lows, putting in higher lows, and continuing on upward, which is if you're long in that, that's a great chart there. And dollar CAD, I believe, also has some positive correlation on the edge finder. Yeah, it's got a strong buy reading overall. We are officially, guys, we're in the month of March now. So I wanted to take a moment to look at like some different assets and see, historically speaking, what things do during the month of March. And I need to check some of this data because things seem to have changed around. And I really, so Euro USD, for example, March, historical bias to the downside, AUD USD, historical, like, see, this seems weird to me. Why do we have such odd numbers for the month of March? Um, this would be something to check for sure on our data end, because I feel like this is changing to some degree. Can one of you guys behind the scenes, maybe Frank, if you can hear me? I think Frank can hear me. Wave if you can hear me, Frank. Can you hear me? Okay, cool. Frank, can you help me check this with Giles's? I'm just doing this on the fly before I forget. This data seems really off. Like it changed, like it snapped a lot. The month of March seems a little bit weird on some of the dollar crosses. So we might need to just double check that that's accurate. But yeah, I just wanted to mention that before I forget. Overall, though, dollar still reigning pretty strong on the edge finder on the watch list page. We have USD pairs, USDCHF, you have USD CAD, USDJPY on the possible buy side. And on the flip side, you've got a lot of sell opportunities according to the edge finder on some of the dollar crosses as well. Pound dollar, Aussie dollar, euro dollar. Speaking of the pound dollar, I think this one might be a good one to look at with Frank. I think Frank was talking about the pound, and maybe we can bring him in here and hear from him. Frank, what are you thinking on the pound, man? Oh, I think you're muted. Hold on. I think you might be muted. There you are.
I think it was muted.
Okay, yeah, you're good.
So let's take a look at the pound. Basically, so today, bond yields, I don't know if you've talked about them yet, but they're creeping up again.
Mm-hmm.
Historically, GU is not in a good spot, like for the bullish traders this month. So I don't know. I've been looking at a potential short on GU. I don't know. Wait, I need to share my screen. Yeah, so this is what I'm looking at, is that inverse hammer right off the 50-day.
Mm-hmm.
And then today it crept up a little and then gave it all right back. So I'm thinking, still short, like bias. I'm bearish on this pair, and I've been bearish since it broke this trend line here. But so far it hasn't done a lot. It's been about at break even ever since it closed under that trend line. But I'm thinking that we're going to see some bigger moves soon, and at least a test at these lows right here before anything major happens.
Yeah, and that's a pretty smooth technical chart, Frank. I mean, you've got the overall upward trend. You have sort of that longer term multiple top there up around that 1.35 mark. And I would agree. I think it probably wants to retest that low at the very least. And if it can break that low, hey, the pound might have a bit of a run to the downside, which is really, really interesting there. We just had a donation on the stream. Angelo, thank you very much for the $5 donation. Angelo asks, has anyone thought about showing the change, the delta in seasonality only in the on the edge finder data? That's an interesting concept. I think maybe Frank has even mentioned that before, but like something of like that nature.
Seeing the change, yeah, that would be helpful, because then we can kind of keep track of like how everything's looked in the past, and like we can compare it. But yeah, that's definitely something we should put in there.
Yeah, that might actually be a good idea, Angela. I mean, we have a sort of like a board of ideas that we're working on for the edge finder, but that is on the list. Seasonality and sort of like revamping seasonality is one of our to-do list things at some point. We also want to do some stuff with like inflation data, and and PMI data is another one we want to add. So there's a lot of stuff that we are working on, but that is a great idea. Adjusting and improving the seasonality tab is a great idea, especially since it's probably one of our more popular pages on the software. So yeah. So Frank, what are you thinking on, you've got SPX pulled up. What's your latest on this one?
So the market just doesn't look healthy either. After this break under the trend line, and just sentiment overall, consumer sentiment was bad. The Fed remains hawkish. Just nothing really great for stocks right now, but it, you know, like every volatile market becomes kind of a trader's market. So catching quick swings or like quick dips is always something to look for. Right now, I couldn't really tell you for the stock market. I'm waiting on other confirmation, but like right now, there's nothing really promising to the upside, which is what I'm kind of looking for. So still
Yeah,
kind of waiting.
I think we're in the same boat on that one. I think like right now it's just technically annoyingly bearish and waiting for some sort of sign of life, some sort of catalyst as well. Maybe, good earnings or something that moves the needle a little bit, gets the bulls back in full gear. But yeah, I mean, interesting stuff there. Any other markets that you're watching this morning? So you've got the pound, you got the S&P 500. What else are you looking at, if anything?
Yeah. So yesterday I went short Swiss yen. Um, it was somewhere up here. Prices coming back. I'm at break even for my stop, so we'll see if it gets hit. But I'm I was confident in this move downward, this big rejection off the falling trend line, and the yen started to look like it was getting stronger.
Hmm.
Um, but I know you're long dollar yen, so we're kind of against each other right now.
Yeah, we'll
But
see. We'll see on that one. But mine is a little bit more dollar focused, right? I think it sounds like yours is a little bit yen focused.
right,
Still, though, we'll have to see if there's any surprising news out of the Bank of Japan or anything like that. What are you thinking on gold here? You got that one pulled up.
yeah. So yesterday, because of the sentiment data, we talked about it a lot in the community, but we were watching this break right here. People were saying they're going to short here. People were saying they could long if it broke out, and it looks really bullish right now. So I kind of miss this trade. I don't know if I want to get in, but I might wait for a nice pullback if we get one. But it looks like it just wants to keep running. But I don't want to join in the middle of a big swing. So
Sure. Yeah, no, I feel that. And I think there's some mixed sentiment on the edge finder with the gold market, but with it starting to trend back up, it's probably going to fall off the sell reading and probably go back just to neutral. So, gold for me is probably sort of more on the pass. But if you were to be a bull, I think maybe waiting for like, some push to the upside, looking for pullbacks, that sort of thing might be interesting.
right.
Yeah. Well, cool. Thank you, Frank, for coming on to the stream. As always, you guys know and love Frank. We get comments all the time. What does Frank think about this? And bring Frank back on. So there he is for all you Frank fans. And Frank, we'll see you back next time.
See ya.
Yeah. So Frank mentioned a little bit of the yen concept, him being short Swiss yen and myself being long dollar yen. There's some overlap there, but mine is kind of very focused on the dollar play. And you guys, if you watch the channel, I spend a lot of time focusing predominantly on the dollar pairs. Sometimes they love me, sometimes they hate me, like my euro trade, which teased me pretty bad. We took a short, went really well, and then flew through the highs and stopped me out there for a loss. Unfortunately, I've got a video coming out on that one today, so stay tuned for those of you guys who want an update on that. We'll be going through that. So yeah, yes, my stop loss is hit in front of everybody. It is the life of I will say this: trading is hard, and if I can vent for just a moment, trading in the public eye is probably even harder because it definitely even harder. Privately, we all make mistakes, but nobody's sort of looking over your shoulder. Publicly, ooh, you get some serious backlash. But you know what? I've been doing this for a while. I feel like I've got pretty thick skin to this stuff now. And it just happens. I took a loss and unfortunately just did not follow through on the trade like I was hoping. Here's gold. So gold, Frank mentioned it. He was talking about how gold looks pretty strong. I think you might have a little bit of rejection that comes in once you get up into this 1845 mark. This is a key spot for sellers in the previous time. Now, is this going to be a full-blown sell-off? We'll see. It depends what kind of happens with that dollar. But predominantly, I would say even if you're a bull, it's probably fair to say we could see a bit of a retracement move kind of following this. And if anything, if you're you're like a bull on the gold market, maybe you're looking for something like a pullback in order to potentially get long. Something like this could even be good in the short term. Just looking for that pop up into where I think we could go in the short term, 1844, 1845, that area of resistance. So yeah, we'll watch to see how that plays out. Make sure, guys, also, if you're not already in it, Frank and I, we share tons of stuff in our Discord every single day. If you're not already in the Discord, we have a free one available. This is what it looks like. Let me show you guys. I'll pull this up. So we have a Discord channel. If you're not already in the free Discord, we just dropped this link. Click this link. It's right down below. Make sure to click that link and join our Discord for daily trade ideas, technical analysis, fundamental analysis, news coverage, all sorts of good stuff. If you're not already in there, make sure to join that using the link that just got dropped in the chat for you guys. And again, it is free to join right there. So yeah. There we go. Now, guys, we're going to take one moment to hear from our sponsors, which, of course, make this stream possible. Despite the chaos today, we still have sponsors. We've made it through the stream, which is fantastic. So let's pause and hear from our sponsors, from Mr. James. If James is ready, we can bring him in and he can do his thing.
Yeah, thanks, Nick. I want to shout out Superfunded today. A1 Trading is excited to finally announce our official partnered prop firm, and we've got a pretty awesome offer for A1 Trading fans today. Superfunded is a new prop firm to enter the space that is looking to fund profitable Forex traders. If you have the skills but lack the capital, Superfunded is the answer. With Superfunded, traders are able to take an examination to prove their trading skills and have up to 90 days to pass. Superfunded is ideal for both swing traders and day traders and even allows their traders to hold positions over the weekend. Superfunded is a funding program powered by 8cap, created for traders by traders. If you're looking to get funded, check out their examination today and get 10% off when you use code A1 Trading. So again, Superfunded is a brand new prop firm to enter the area. They are partnered with 8cap, so you know that they are the best in the business, and you can get 10% off of that examination when you use code A1 Trading. You can click the link down in the description below to get started or to just find out more information. Now, let's get back to the show.
Awesome. And thank you, James, for that message. Again, we are supported here financially, guys, by our sponsors, Superfunded, Forex Tester, and 8cap. They make all this stuff possible. This stuff is not cheap to run, but we are fortunately able to do this every day because of them. So make sure if you're looking for a fund to trade with, check out Superfunded, consider them. They're newer to the block. So, check them out, see if it's something that suits you. But what I like about them personally is they have sort of loose rules compared to a lot of the prop firms out there. So if you're looking to get funded, again, it might be worth your while to check out Superfunded and get that 10% off discount that James mentioned down below. So let's see what else we can talk about with this market here. GJ might be something to pay attention to, at least from a technical chart. This looks really interesting. Price came back down into this area, and it narrowly hit the 61.8% before seeing some reaction here this morning. For the GJ bulls off the 4-hour chart, what we're noticing here is that price is coming back to what was a level of resistance and holding this area. It tagged the 61.8% retracement. And this is sort of a line in the sand, in my opinion, for the GJ bulls. Price should, if the rally is going to continue, it should find buyers in this area. If this falls apart, I would say that GJ now looks bearish. So keep an eye on that going into the remainder of your trading day. If you're watching GJ, I know a lot of you guys trade this one. So speaking of GJ, let's also take a look at another yen cross. Here's the euro against the yen, which very strong, guys, and probably topping the list on our heat map today. Let's go look at the heat map and see if this one's up there. So yeah, you've got euro yen, NZD CAD, euro dollar, NZDJPY, NZDUSD, and euro GBP. These guys are our top performers on the day in the currency market. And of course, we also get our data from the indices as well when they update. So we can kind of get an idea of how each indice is performing, as well as the currency market, which can be useful information, especially if you're a day trader. If you're looking for momentum, you might want to check out some of these currency pairs, and you might want to check out some of these currency pairs, because these are the ones that are moving. If you're a day trader and you like momentum, check out these currency pairs: euro pound, NZDUSD, NZDJPY, Aussie NZD, USD ZAR, and pound New Zealand. These are some contenders to potentially check out if you're on the day trading side of things. By the way, guys, this data that you're looking at is 100% available for free in the Edge Finder free version. If you don't have the Edge Finder free version, check it out. We just dropped a link in the chat for you. This is entirely 100% free. You get in the Edge Finder. So I'm working on the Pro right now, but if you don't have the Pro and you just want to try out the free version comes with a whole bunch of good stuff. You get the score chart, you get the market heat map, economic news tab, you get the retail sentiment tab where you can see what retail traders are up to. I mean, this data, for example, this is all free to use on the Edge Finder free. All you have to do to get access to it is, again, click this link, fill out the form, and it will it'll direct you to where you can get access to the free version. No hassle, no problem. So there you go. PMI in 3 minutes. Yeah, that'll be interesting to see. Let's go check Forex Factory just to see where we're at with that. Forex Factory going into ISM manufacturing PMI. And this could be interesting news here this morning to see if markets want to react to this. You've got a level. So this is basically the measure, level of diffusion index based on surveyed purchasing managers in the manufacturing industry. So it is released monthly on the first business day. Why traders care. It's a leading indicator of economic health. Big businesses react quickly to market conditions, and their purchasing managers hold perhaps the most current and relevant insight into the company's view of the economy. So this is big, right? Purchasing managers involved in a lot of right on the cusp of things purchasing, right? And they might be pulling back if they think the economy is rough, if they think a recession is coming. They might be full steam ahead if things are good. So we've got that coming out in just a moment. Should be interesting for USD pairs. It is marked as a red folder here on Forex Factory for your Wednesday trading activity. This could cause some volatility for some dollar pairs. So please beware if you're in some dollar trades. We are likely to see some volatility here coming in the next 30 seconds as we get going. So we're just going to react here to the dollar, see if there's any sort of volatility there. Dollar reacting positively this morning, finding a little bit of support in this area so far today. And let's just watch the reaction as we come into the PMI data. And then we'll follow up with Gary. We'll get some of his reactions going into the remainder of the New York session here. So got a loaded show for you guys. If you're enjoying the content, hit the thumbs up button. Let's see if there's any volatility on PMI data regarding the dollar here. A little bit of a sell-off here. Let's see if we can get any data coming out. And of course, we will have that for you live coverage in just a moment. As soon as we have it, we'll share it with you. Dollar now moving up a little bit, not anything super substantial, but starting out the hour positive so far. We'll go see if we can get updated numbers on manufacturing PMI here this morning for you guys, and then we will hand over the show to Mr. Gary and see what he's got for us this morning. If the numbers would come in, again, probably going to cause some stir across the board for dollar related assets. Still no news on my end. If anybody has the numbers, please feel free to share them in the chat as we come into this manufacturing PMI data. Very, very interesting. See, is gold getting any sort of reaction here? It's crazy because the market will oftentimes react much faster than the data that comes in on news sites and things like that. It's funny how that works. 47.7. Okay, so slightly negative. Thank you guys in the chat. I'm getting that from, this is the handy dandy YouTube chat feature. Not too much volatility there, slightly less than expected. Just causing sort of some volatility to be introduced into the dollar. So now, guys, we'll turn our attention. We'll bring in Mr. Gary and say hello to him. Mr. FX Big Dog, how are you, sir?
I am doing fine, Nick. How are you doing, buddy?
Good to have you back on the show. Gary comes on once a week. He is a technical trader. He does incorporate some of the fundamentals as well. And he's been a long time contributor to the A1 trading community here. He has his own YouTube channel, his own content. I'm excited to have you back on as always. And before I step out, give you the show for a little bit, let me make sure to plug your channel. Guys, in the chat, we're going to drop a link for you to go check out his content. Stick around for a little bit. If you enjoy Gary's content, make sure to go support him, subscribe to his content for more. Gary, thank you for coming on. I'm going to drop out and let you take over the show here.
Fantastic, Nick. Thank you very much. As Nick was mentioning, I do have the YouTube channel, FX Big Dog. Go ahead and check it out, as well as Traders Network Club. I haven't been really very active on the YouTube channel as of yet, but I'm going to get back into doing some more sessions. specifically because there's something we actually having a conversation around in a couple of sessions that I'm doing, and that is around the 5-year protection and profit growth plan, which means basically building up a plan, putting together a trading plan in order to be able to have a revenue stream coming from your trading, which means that you want to build up your account to a certain level that it pays you monthly and gives you a good monthly income based on the sort of returns that you're getting based on the account size that you've built it up to. Which means that many of you are starting off with maybe small trading accounts. It's not really bringing in, or it's not subsidizing a income, maybe a job or whatever it is. It's not subsidizing the income that you need in order to be able to live every single month. And so the whole idea about the profit, let me go ahead and pull it up here. It's called the Profit Protection and Growth Program. Is a 5-year growth program. It's basically saying, hey, listen, yeah, this is what I've got to trade right now. This is the type of strategy I'm trading. This is the type of returns I'm getting. How do I build this account up in 5 years that account is now going to give me a subsidized income, or could be another additional revenue stream that I could earn or live off for that period onwards. And so it's building up that trading plan, and it's about the strategies, about the risk, it's about the potential profits, and of course it's about what your goal is at the end of the 5-year plan. I'm actually starting to implement that in quite a few of my sessions already, and we're going to get a lot more involved in that. We're going to do some sessions for the Traders Network Club, so make sure you guys go ahead and check it out. Check out tradersnetworkclub.com. We're doing some great stuff there, and helping a lot of people. Going on to the conversation about what should we be focusing in on as we move into 2023. Well, Nick did touch on a little bit on the dollar, and we've seen a little bit of a downside move on the dollar today due to the data that came out. But at the end of the day, when you look at the markets, it's really got to be you really got to look at the markets from a long-term perspective. And the reason why you want to do that is because you want to identify what the markets are telling you based on this long-term structure. Which means there's a simple thing. If the market is trending like this, then we know that it is in a downtrend, first thing, number one. We know that when the market retraces back up, we should be looking to sell it because the long-term profits are down here. That also means that there could be some potential upside move right here that could be profitable, but you'll have to adjust your trading strategy because you can't take a long-term trade opportunity on a short-term move because you're just looking for more than what the market's going to offer you. So you got to be realistic about what you're chasing after so that you don't get disappointed, but more important that you don't take on big losses because you're hanging on to a trade that's never gonna materialize just because you think it's going to materialize, right? So you have to be realistic about what the market can offer. And so the only way to understand that is to understand where you are in the marketplace. What type of environment are you trading? Where are you in that environment? And what is the market saying that it can offer you based on the up move or down move of that trend? And so those are the important things, specifically when you're looking for a trading plan and you're building up your trading plan with a strategy, plus, of course, risk and profits. And so that brings me back to, the dollar. The dollar index is something that many people are looking at because it is the dominant currency that is traded across the world. And if you look over here, we all know that, if the dollar is something drastically happens here in the U.S. and the dollar gets affected by that, it's an effect that can triple or at least wave out into the world economy, right? Ripple. That's the word I'm looking, not wave out, but ripple out into the world economy. And so if we looking at the dollar right now, we're trying to establish what the dollar's long-term goal is. Now, traders, when we were looking at the dollar and we noticed that the dollar had rallied up, we had big highs over here, we noticed that this pattern was forming right here. This was a rising wedge. And this rising wedge told us that price is going to go ahead and start working its way back down towards the lows right here and eventually down to this point right here, which is already done. You see there? It's done that. And then we had this falling wedge here that was created. And this falling wedge indicated that price is going to go ahead and rally up and take out the highs right here, which it has done. So when we see these sort of patterns, it helps us to be able to find the turning points of the market, and that's really what it comes down to, right? It comes down to the turning points of the market, because if you look over here, you'll notice that if the market's in a sideways range, we want to identify where these turning points of the market is, so that we can trade it bullish in consolidation or bearish in consolidation, and bearish again in consolidation. As long as we know where those turning points are, we know when to stop trading long and start looking to trade short, or the vice versa, stop trading it short and start looking to trade long. And then, of course, trends is very simple. When the market's trending up, we can trade tops and bottoms, because when it's up here and the range is long enough, so which means if we got 400, 500 pips going south down here, we know that we can go ahead and trade a shorter time frame and make profit down here, but know where to stop, so that we can reverse our position, start looking for the market go back up. So note this, traders, that if there's anything that you have, if you're new to trading and you want to learn something that's really going to help you to become better at trading, understand market conditions, understand market environments, and understand where the turning points of the market is, so that you know when to good time to start buying and good time to start selling. But also, more importantly, when is the good time to start holding on to a trade? All right. Now, I'm not talking about I'm not saying be married to a trade forever and ever, because that could end up burning you and hurting you quite a bit. But if your strategy is based on finding these turning points and committing yourself to the turning point until the market turns, knowing that you're trusting the wave structure or trusting the pattern that you've got, it can be extremely profitable. It can, and it can be extremely stress-free too, if you've got a good risk management strategy behind that as well. So let's dive into some market analysis. And for those that have been following me for a while, I've been doing this for close to 30 years. And yes, I've trusted more the technicals than I do fundamentals. Fundamentals are just, I believe, are just market movements that are fulfilling your technical setups. So if you've got a wedge forming and the market's indicating that the market should be rallying, fundamentals can help it push it out of that wedge and go towards your targets. And if you're in a trend, the fundamentals could either be helping you create that correction move, or it could help create that downward trend move that you've seen on the chart already. And so let's go ahead and break it down. And very importantly, I'm going to break it down based on a technical analysis. Everything's going to be based on technical. It's not going to be like, well, this is what I'm feeling, right? Fortunately, I know that the world's changed, the culture's changed, and everything's about feelings. Well, this is not about feelings. This is about actually what the markets are telling you, and not how I'm feeling today. So this is about what the markets are telling me and how I'm going to trade the markets, instead of just trading my emotions and using my feelings to define what the markets are telling me really. All right? Because honestly, if we have to go on feelings, we know that our feelings are most of the time not right. So let's go ahead and take a look over here. So on the dollar index, I'm looking at the daily time frame. We established an upward move towards this point right here. And as the market got to this point right here, I'm now anticipating that price is going to start working its way back down south. So this is how I look at the market, right? I look at the market saying, when we were down here, we wanted to see price go up to take out this level. Now that we're at this level, do we see price working its way back down? Well, the thing is that you have to use as well is that market moves in waves, right? And so what I want to do is I want to go ahead and pull in another fib right here and put it down right here and put it up over here. And as I look over here, I notice that we still have a bit of room for price to move back up again. So we're not quite there where we can anticipate price to move back down. Now, if it moves back down, then this will be a surprise to the market, which means that we may just go ahead and take out the low right here and then come back up a little bit deeper. But this is not where we're anticipating price to move down yet on the dollar. Do I expect dollar to fall at some point? Yes, but I'm waiting for it to get to a resistance level that is not only confirmed on a previous high, because we all know that when the market takes out a previous high, it's normally going to see a bearish move. But I also like to use my Fibonacci extension levels to define that the market's now actually trending up to that level. And so I see dollar getting a little bit stronger, and this might just be a little bit of a pullback that we're seeing here, but a continuation of this rally may continue. Now, another thing here that we also have to point out, the oscillator is overbought. Traders, we've seen the oscillator moving into an overbought condition, and price still moved 200-300 pips up. So seeing the oscillator in an overbought condition isn't necessarily a good reason for me to jump out of a buy trade or stop looking bullish just because of that. There's a lot of other things that need to take place too. Another thing that could give us a very good early warning sign is to look for price or these trend changes on the lower time frame. And there's a lot of indicators that can be used to be able to identify that. And I'm going to go to this one right here. This is a 1 hour chart right here. And as I look at the 1 hour chart, I am seeing a shorter time frame that's indicating that price did take out this low right here. Price did take out that low. It created a new high right here. And if I look over here, there was a high formed over here. There was a low formed over here. So this tells me that the 1 hour is trying to tell me something. Now, here it did take out that high and it created a new high. Then it came down and took out that low and created a new low right here. So what it could be saying to me that it's maybe range bound. What's important, if you notice this purple line right here, this is a 200 EMA. The 200 EMA is a good sort of trend-based indicator. And at the moment right now, it's telling me that the short-term trend is still bullish. And if the short-term trend is bullish, then I shouldn't be thinking bearish yet until I start seeing price trading below the 200. Then I can start looking for some wave structure and some trend reversals down below. Right now, it's not happening. All right. And if it does happen, then maybe then it would be that early turning point that I'm looking for right here. But again, I think based on the 1 hour saying that's still bullish, that we could still go up a little bit higher before we see a downside move. Now, based on that, it's telling me that dollar's still strong. So that means that if I'm looking at currency pairs traded against the dollar, I could still trade dollar strength. And as long as the technicals line up, I can go ahead and trade that. So let's go throw in a couple of options here, right? And I'm going to go ahead and take a look at, for instance, US dollar CAD. Here is a trade that we're in on, and I'm going to go to the daily time frame because we set this one up on a daily right here. And we're set it up based on these movements right here. If you notice my chart, you'll notice that we have a 5-wave structure right here, but we're in a 4th wave correction move. So here we go. There is wave 1, 2. We entered the trade based on the wave 2 correction. We didn't quite get it right at the bottom right here, but we managed to get in when we started seeing the markets on to turn to the upside. So we got in right here. We are looking for price to move towards that 1.618. Now, it came shy of that, which means that we still expect price to go up to that. So I've got 2 choices here. I've already moved my target up here to my price profit taking area to around about 95.05. This is where we're expecting the market to have a deeper corrective move. So at the moment right now, if we do not hit this level right here, and price does continue to move back down and maybe test this, you'll notice that we've got a pending order to buy at 92.92. So we'll probably go ahead and re-enter there to catch it to profit at the 5th wave up here at the top. Now, this is a typical wave structure that's creating a nice little swing for us to go ahead and trade. Again, trading what the markets are telling us. The market are telling us that we're in a trend-based move on the US dollar Swiss, and we've been trading that since back in mid or start of the February month. So we've been trading that for about a month. Now, some of you might be like, oh, well, big dog, I'm not really a trend trader. Well, that's it. That depends on you. You've got to find the strategy that works for you and what fits your personality. That's fine. But here's one of those setups right here that we're buying the US dollar Swiss. So looking at the dollar index right now gives me a little bit more confidence to continue to hold dollar Swiss long, and that I'm going to expect price to move up a little bit higher. Now, I can also go down to the lower time frame to go ahead and define what I'm seeing here, because there's a good chance that we're seeing a wave structure here that tells me that we're probably going to go ahead and pump up a little higher based on that structure. And so let's go down to the 1 hour right here. I'm going to pull up this one here. Let's go to this chart here. All right, there we go. All right, so this this chart here, come on. There we go. So this chart, if I go to this chart right here, and I'm looking at the wave structure, then I'm going to go ahead and start off at the bottom of the wave structure right here. Let's go ahead and do some housekeeping here. All right. So I'm going to start off with the lowest point right here. I'm going to start building my fibs up from the lowest point to there. And let's go ahead and make some changes here. Just get that Fibonacci a little thicker so we all can see the numbers. And they might be way too thick. I wish go one too many. Let's go 18. Let's go 16 on this one. All right, cool. So there we go. Now we know that we have a price target right here. Now, with price coming up to this level right here, that doesn't really tell us a lot because price has not got to that level. So let me just go ahead and update this. All right, so price has not got to that level yet. Now, this is the inside structure that I'm seeing right here. I'm noticing the market created this wave structure that is here. There's wave 1. There's wave 3 up here, and wave 5 will be over here. So this is what it's telling me. It's telling me that, yeah, big dog, we might just have come off early and made a wave 3 shy of this, and that means I might have to check my fibs here. Maybe I've extended my fibs more than I should have. There we go. That looks like a lot more interesting there. There we go. You see, they're connecting the lows and highs, making sure that lows and highs are connected. And now that I've done that, now it's actually showing me a little different sort of setup right here. And it tells me that, yeah, I did hit that 1.618 right there. And maybe this one's not quite on it. There we go. So, yeah, it tells me, yep, I may have hit that 1.618, which means that this is a fourth wave consolidation right here. So fourth wave consolidation means that I've got to understand the market, right? Remember, we spoke about environment trading. And we have to understand that, hey, this could be a range-bound move, and this could be taking a day, maybe 2 days, where it moves into a range, and then it goes ahead and takes off. I know I'm above the 200 EMA, so if the market does come back to support right here, I should be buying. I know that there is a level here that the market should not trade below, which is this wave 1. And so I'm going to expect then price to continue to move bullish. But if I'm going to trade this, my strategy is going to be different. So my strategy on this would be something like where I would enter here. If the market comes back lower, I'll go ahead and enter some trades over here, because I believe that if the market does come to these levels, eventually it will go bullish because the wave structure is still in play. Again, dollar still looks like it's going to be strong a little bit to the upside. So that's how I'm going to approach the US dollar Swiss. So I may be adding some new positions on this, but I will still be bullish on US dollar Swiss just because of the way I've analyzed the market right there. Another good setup that developed that we took some profit on, we actually closed out this trade right here, was the pound Aussie. And again, traders looking at structure, very important, making sure that you look at structure. If you take a look over here, and you have to break down the chart, and you look, and I think I spoke about this in the last session I was with you guys. Last week I know I was in Jamaica, so it wasn't last week. It must have been the week before that. But if you look at the structure right here, what do you see? And that's what you got to do. You got to really be true to what you've seen and just talk about what you've seen instead of trying to make up stuff, right? So what do we see here? We see that price is in a range, all right? And so we also see that we created this AB boundary right here, the swing in here. And normally swings don't really apply inside consolidation unless you're trading a lower time frame and you're trading the inside structure like this. But when you're looking at a larger structure and you're looking at the swing, this is placed there for just one reason only, because if we do break out, I want to see where price is going to go to, where it's going to bounce and go back up again. And so what we did on this trade right here, we actually missed our entry point here, but when price broke here and came back here, we entered here and we looked for profit taking here at the top of that high. And the reason why we did that is because we do believe price could go up to this level, but we also played what we could see as an irregular flat. An irregular flat pattern sets up something like this, where it creates this break out of the low, it comes back inside, and then it chases after the high right here and then sells off towards this level right there. And so being inside consolidation, we didn't want to take any risk of the market not getting to this point. So we took early profits right here and got out of that trade. And that was about 420 pips or so that we managed to get out on that. And that was the trade, trading the pattern. And traders, that's what it is. You can't just have one strategy that you go ahead and focus on, because one strategy might not apply to all market conditions, nor would it apply to all currency pairs, because they structure differently. This one right here wouldn't be a wave structure. You'd have to do something a little different. And what we did is we did a sort of a cost averaging trading approach, where we'd go ahead and buy, and if price moved down to this level right here, we'd probably be buying around about here too. Because why? Because we expect price to go back up to test the breakout point. There we would be profiting, and then we'd look for price to go down. So we could sell at this point and look for price to sell off, because now that it's tested the bottom, we can expect price to move down. So again, looking at every pair and breaking it down, making sure you check the structure out, that can really help you become better at trading. Someone mentioned pound JPY real early, about 9:30 this morning, when I just popped into the room for a minute there, and I noticed someone speaking about pound JPY. Well, let's go take a look at pound JPY right here and just go ahead and take a quick look. I mean, if you look at the setup right here, this should tell you something straight away, very much. I mean, right here, I don't even have to compress the charts as much as this. But if I do compress this right here, we notice that we're in a larger up wave. We call it wave 1, and we're looking for a wave 2 correction move. Now, some may call this one right here the correction move, but this was a big spike. We had a bit of a flash crash here on the pound last. When was it? When was that set up? Oh gosh, was it October? Let me see here. Was it November? I think it was September, October right here. Oh, there it is. Yeah, it was September. So late September, we had this little flash crash on the pound, right? Where we had the pound dropping back. You see all the pairs they basically dropped back down south and came back up again. And so as we look at the pound and we break it down, we notice that this big spike right here isn't really, and I'm going to say what it is. It's not tradable pricing. I mean, you try and get yourself into a flash crash. You try and trade a flash crash bottom or top, right? You try to get into that, and you'll notice that brokers aren't going to fill you the price you want. It's really difficult to be able to get in or out of that particular trade. So it's not really tradable, right? And a lot of people might look at this and go, oh, man, look at this great opportunity. Well, try and trade that. It's not that great of an opportunity, is it? So here's the opportunity right here that I'm looking at. As price went down, as we created this high right here, and as price did drop back down, and then it came back up and failed to stay above here, it's telling us that we're looking for price to start working its way further down to take out that low. So this flash crash low right here is going to be tested again. And the pound JPY will probably be heading down towards that level. And so how do we trade it? Well, we've been trading this for a while now, since the top has been created. And we went ahead and we started looking at these wave structures. And this is the wave structure that we have set up right here. Here is wave 1. Wave 1. So wave 1, price went here into a range. We created a wave 2 right here. We broke out of the range. We dropped down to wave 3. Then when we broke down to wave 3, price came up to create a wave 4. Then we drop down to the 1.27 right here, and then price rallied back up again. Now it's come back to retest this level. We believe right now that price is now in a larger structure, which means that this low right here that we created, that fifth wave, is now the big swing. And look at this. We pull back to a 618 retracement. It's at the backside of the trend. And we are moving back south towards these lows down here. So what we should be doing is we should be looking at the market structure that's taking place over here. So let's go ahead and pull up a couple of things here. Firstly, number one, I'm noticing that we're seeing a little bit of a pattern, right? And this pattern is in a form of maybe a rising wedge. Now, if this is a rising wedge right here, we're in an overbought condition. You actually see, well, we don't see divergence here setting up right here. But if we break below this wedge here, price is going to chase after pretty aggressively towards this low right here. So we could anticipate price on the pound JPY to drop back down to around about 157, 156, maybe between that, as the first downside target on this particular pair. So let's go down, let's go ahead and look for opportunity on the lower time frame. So now that we understand what the turning points are going to be on this pair, we're anticipating the turning points to be, and we anticipate that the market's going to be in a bearish run, let's go down to the lower time frame and let's go take a look and see what we can pick up right here. So firstly, number one, what I'd want to go ahead and do is I'd like to go ahead and start off at the highest point of that turning point right here. And I'm going to follow this because this is what's key right here. So here's my first swing right here. And it looks like I got 1 minute left and I'm going to cut loose here. So here's my swing right here. So the first thing I'm looking at over here is that price is stalling here at the 200 EMA and my 127 right there. Which means that traders, that maybe it's still going to be bearish. But what we're going to see on this, we're going to see what we call an irregular flat pattern. Which means, traders, you have to understand patterns. And market's going to do something like this. We may see a rally to take out the high right here. And this is where your sell zone is going to be. Now, I would be on the sideline and not doing anything on the pound JPY until it comes out and takes out the highs right here. And this will be my sell zone right there. That will be my sell zone to start looking to sell. So pound JPY, it's not ready for us to go ahead and trade unless it does two things. Either it does one or the other. It either has to go ahead and pull back up here above these previous highs here around about 164.75, or it drops back down to 161.90, takes out, hits that area, and then pulls back up. That'll be my area to go ahead and sell again. So that's what I'm looking for. Now, that's if I was trend trading. If I was not trend trading, then what I could possibly do is I could trade consolidation. Go down to a 15-minute time frame, look for a breakout, and trade the breakout of this consolidation. And if you go to the 15 right here and you take a look and see what that looks like, this is what it looks like right here. So if you get a breakout of this, you could trade the breakout, put your stops above here, and look for the market to drop towards that 1.618, because that's the downside target right here at 71.91. So that would be a breakout trade of a potential 100-point drop. Stop losses would be in the region of, you could put it 50% above that level. So you're probably looking at a stop loss around about 45 pips, looking for a 100 pip gain on that. And if it does come back in the range, then clearly it's chasing after the highs that we spoke about up here at the top at 164.70s. All right, traders, I have to cut loose here. I've got another trading session that's taking place. I want to go ahead and thank everyone for a fantastic session today, because I think it was great. I think we learned a lot about market conditions and why we should be trading, why we shouldn't be trading. But also, more important, traders, have a fantastic afternoon. Have a great time, and I will see you back again next week, same time, same place. With that being said, this is FX Big Dog signing off.
Thanks again for watching today's show. Our goal at A1 Trading is to continue to share free value to our audience through daily videos and articles, keeping you up to date with the latest market coverage. If you enjoy our content, make sure to subscribe for more. And remember to check the description below if you're looking for a new broker or looking for a trading community to join. From all of us at A1 Trading, have a great day, and we'll see you next time.